Oil just hit the 97th percentile, and oil at this percentile has preceded demand destruction in 4 or 5 cycles. Something is breaking beneath the surface, and the data confirms it. Right now, oil is at $99.3, the 97th percentile for the past year. Historically, oil at this percentile has preceded demand destruction in 4 or 5 cycles. Says the data needs to confirm. The commodity analyst says, we're in a commodity supercycle driven by underinvestment and deglobalization. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. The commodity analyst's commodity supercycle call is paying off. Oil at $99.3 and trending their direction. 99-day streak. Snyder just moved from wrong to right. Snyder called it dollar liquidity crisis. Yield curve at 0.50% confirms it. McElroy is waiting on confirmation. The narrative holds, but the data has not validated it yet. 98-day streak. Hartman might be right, but the data has not confirmed the thesis yet. 92-day streak. Too early to call the dollar analyst right or wrong. The thesis is building, but not confirmed. 8 days running, Gammon just moved from right to wrong. Bad stretch for Gammon, for now. Investment grade, spread at 86 basis points, says the opposite of credit will blow out. The volatility expert just moved from early to wrong. Bad stretch for the volatility expert, for now. VIX at 25.8 says the opposite of volatility expansion. Score today, 2 right, 3 early, 2 wrong. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. Today's big question, are commodities in a supercycle, or is this the top? On one side says, the data needs to confirm. That is the setup. Everyone hears it on the podcasts. It sounds convincing. On the other side, the commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. 2 smart people, opposite conclusions. So who is right? Here's what the data says. Oil at $99.3, 97th percentile, up 5.2% today. Gold at $4,770, 84th percentile, up 0.4% today. Copper at $5.71, 77th percentile, down 0.9% today. Bottom line, the data is split. Neither side has a clear edge, which means the resolution is coming soon. If oil drops below $80, the supercycle call is in trouble. Right now, it is at $99.3. If copper breaks to new highs while oil falls, it is demand rotation, not a supercycle. Oil at $99.3 is in the 97th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,770 will track it daily on the scoreboard. None of the 7 are talking about this next signal, and they should be. The S&P 500 just surged 2.5% to 6,782.8, sitting at the 69th percentile for the past year. Historically, the S&P at this level has historically marked a regime inflection. None of the 7 are talking about this. Keep it on your radar. High-yield spread just surged 2.3% to 312 basis points. A move this size demands attention. Historically, high-yield stress at this level signals institutional risk aversion building. And here's another signal flying under the radar that deserves your attention. Phase 1 is the good times, but good times do not last forever. Here's how close we are to the edge. We are 64 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points, currently at 86 basis points. Pace is flat or improving, no urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has VIX, initial jobless claims flashing red. Snyder says the Eurodollar system is tightening and nobody sees it. The data agrees with that assessment. Phase 1 holds with 64 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the ZIP level data is screaming about today. Jefferson, AL. People moving in can't afford to live here. 22,742 households moved into Jefferson, AL. Their average income, about $67,000. Median home, about $878,000. Unsustainable migration pattern, demand without purchasing power. SD, days. On market is spiking in Sioux Falls. Days on market in Sioux Falls moved plus 99% in 30 days, now 232 days. Buyer leverage score, 68,100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. DX, days on market is spiking in Hereford. Days on market in Hereford moved plus 99% in 30 days, now 193 days. Buyer leverage score, 57,100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, are commodities in a supercycle, or is this the top? Let me show you what happened the last time we were here. Oil at $99.3 is in the 97th percentile. That means it is higher than 97 out of 100 days in the past year. In 2022, oil spiked above 120, then demand destruction pulled it back 40% in months. In 2020, oil went negative for the first time in history as demand collapsed. In 2018, oil dropped 40% in Q4 as growth fears overtook supply concerns. Different environments, different catalysts, but every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, gold at $4,770 is in the 84th percentile. The last time both oil and gold were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. History does not pick a winner here, but it does say the resolution is coming soon. Be positioned before it arrives. Here's what the data says to do right now. Stay alert on VIX. It is surging 6.7% today. Fast moves demand attention. Avoid Denver at 36% payment burden. That is stretched territory. Watch the S&P 500. It surged 2.5% and nobody is talking about it. Every signal is live at analyze.builderslens.com. 7 speakers, 65 signals, 1 question every morning. Who is right? Subscribe, and I will see you tomorrow morning.